What's up, guys? It's Rob here, and today we need to talk about the recession that we officially entered today and the massive lies that are being spread by the government trying to cover their tracks and essentially tell people that there's nothing to see here, there's no recession going on. And it is so obvious what's actually happening. We're going to break it down for you in this video, talk about the actual definition of a recession, explain to you why we're currently in one, what the government's trying to say we're in, and how this is all likely to affect stock prices because it's very interesting and surprisingly simple what's going on in the stock market. So we're going to start off just by showing you guys the old definition, the technical definition of a recession that people used to use until apparently this morning. So a recession is a significant, widespread, and prolonged downturn in economic activity. One popular rule of thumb is that 2 consecutive quarters of decline in a country's gross domestic product or GDP constitute a recession. Now, that's the definition that people have been using for a very long time to essentially define a recession. 2 quarters of decline in GDP. And if you look at what just happened, this morning, GDP fell 0.9% in the second quarter. That's the second quarter that this GDP number has declined for. And now the media is calling this a strong recession signal. They're not actually calling it a full-on recession because look at this. The White House website recently tweaked their definition of a recession right after GDP numbers were released. They say on the White House website, what is a recession? While some maintain that 2 consecutive quarters of falling real GDP constitute a recession, that is neither the official definition nor the way economists evaluate the state of the business cycle. Instead, both official determinations of recessions and economists' assessment of economic activity are based on a holistic look at the data, including the labor market, consumer and business spending, industrial production, and incomes. Based on these data, it is unlikely that the decline in GDP in the first quarter of this year, even if followed by another decline in the second quarter, indicates a recession. So essentially, this is the White House saying there's nothing to see behind the curtain. Don't look back there. There's no recession going on. Forget the second quarter GDP data release. There's no recession going on. We're going to tell you when you're in recession, and you just have to believe us based on how we evaluate all this data. And, that's not a very fair way, in my opinion, of looking at what a recession is. When you look at the stock market and you look at the past year and you notice that stocks have been declining about 23% from the highs to the lows over the past 6 months, when you actually look at the GDP numbers that have come out and do see a negative 1.6% reading in the first quarter and a negative 0.9% reading in the second quarter, you notice it's declined 2 quarters in a row now. It looks an awful lot like we are in recession and like the White House is trying to cover their tracks because the last thing the White House wants is for us to be in a technical recession right before the November midterm elections. They don't want a bunch of people complaining about recession while they're going through an election cycle. That's the absolute last thing all these politicians want. And so, of course, they're going to try to cover their tracks, make it look like the economy is doing great, and try to make it seem as if we're not actually in a recession. Whereas it certainly looks like we are, and according to the old definition, we are technically. So in my book, we're in recession. It's exactly what I was expecting, and stocks are reacting exactly as I was hoping and expecting they would. Stocks are actually moving up, and in a very important way. Look at this. The S&P just bounced off of the $400 support level. If you look at the yearly chart, you can see that we broke through this level a couple of weeks ago, about a month and a half ago, and just broke through it yesterday and used it as support today. This is a very strong indication that the economy, or at least the stock market, not the economy, but the stock market is coming back. And that's because people have access to the internet. They've looked at all the historical data and they've realized that recessions are the best time to be buying stocks. They've realized that. They've seen that recessions tend to indicate lower stock prices. Stocks have gone on sale essentially over the past 6 months, exactly what we've been talking about on the channel. And this GDP release, the second quarter of decline, the official technical definition of recession being activated, means that people are getting the confirmation they need. Yes, stocks are on sale. It's a good time to be buying. That's what people are realizing. In the past, when you heard recession, that might have induced some fear, that might have gotten people to sell their stocks. But right now, people are actually seeing this as a buying opportunity. Stocks are turning green. Exactly what we were hoping for, exactly what we were expecting. If you've been following the channel, we've been talking about how stocks are in recovery mode, how most likely, in my opinion, I think stocks are going to be doing very well. And this is good for multiple reasons. Not only is it boosting stocks today, but it also got a recession out of the way. Now, if you guys were investing for the past many years, you'll probably remember way back in 2018 and 2019, a lot of people were talking about how stock prices had been rising for years and years and years, how we hadn't had a recession in about 10, 11 years. It had been a very long time, and people were very worried that a recession was always around the corner. If you actually look at stock prices those years, you can see way back in 2018, 2019, stock prices were fairly low compared to where they are now. People were complaining that there was a recession. A lot of people were just holding cash because they were worried that a recession was around the corner. And the fact that we're going through recession right now and that we're going to have another recession on the chart means that we're essentially eliminating that excuse in people's heads to be selling their stocks, to be fearful, to be holding a ton of cash for a couple more years, because people have always been touting the fact that, hey, the economy goes through cycles. And every now and then, we're going to have a recession no matter what, no matter how good we're doing. We just have to go into recession every couple of years because that's the way it is. And that's exactly what they were saying in 2018 and 2019. I remember it very well. That was the biggest fear in people's minds. They always have CEOs answering polls saying, yeah, we think we're going into recession this year. And we did have a technical recession during the pandemic, during the early part of 2020. We did have a technical recession, but people kind of wrote that one off because of the pandemic. They said, all right, that was artificially induced because of the lockdowns. And then we got a whole bunch of stimulus that stirred everything up. And they didn't really count that as a real recession. This is the first real recession since the Great Recession. If you don't count the pandemic, this is the first real recession that we're going through. And it's really good, in my opinion, that we're now looking at a period once this whole situation shores itself up, once we get out of this recession, where stocks can be in the green and people aren't going to be worried about the next recession coming around the corner for several years at least, right? They're not worried about back-to-back recessions following each other after a year or two. They're worried about them after 3, 4, 5, 6, 7, 8, 9, 10 years maybe. And that's exactly what I'm hoping for. I'm hoping for a big bull run in stocks. And I think that we really could see that. There's a whole bunch of money that got pumped into the system during the pandemic. Things overall didn't really slow down too much. They got shut down for a couple of months, but we ended up making back a lot of that GDP the following quarter. So overall, the economy's grown, but we've had a whole bunch of cash pumped into the system. I think that cash is in a pretty prime position to decline in value as opposed to stocks. I'd much rather be holding stocks right now. That's just my personal opinion. You guys obviously don't have to follow it. I'm just here to let you guys know what I think about the recession that we've entered and what I think about stock prices. Obviously, I'm a big bull on stocks. If you guys have followed the channel, you know that I think stocks are in a prime position to explode. I think now's a great time to be buying, but that's not financial advice. That's just my opinion. And if you guys appreciate that, feel free to subscribe to the channel. And other than that, guys, I hope you have a great rest of your day. I'll see you in the next one. Bye.